Hello, it's Binni here. Thanks for joining the session. Happy New Year to all of you. How are you? Can you see my face? It's heavy rain now. Very heavy at my place. Very heavy rain in Singapore. Has been raining for the past, I think, since first day of Chinese New Year. Yes, today is day 7, right? Hello, Regina. Long time no see. This session is for you, Regina. As always. Okay. All right, so we are still waiting for more people to come in before I start the session proper. I think it will be a 2-hour session because I've prepared quite a lot of things. Yeah, I can see people from Australia, Indonesia, Malaysia, Singapore. I think we also have people from, I guess, that in the Middle East. Yeah, and also perhaps US. Yeah. Okay. All right, so let's get started. I hope that the voice, etc., the mic is okay. So let me just get started while I think a lot more coming in. All right, if you do have any questions, please ask me towards the end of the session, or rather, as and when, don't need to be end of the session, right? Yes, it's recorded in YouTube, and we would post up the link for you to watch again, all right, in our website. Okay, so you can watch it again, or if you want to, you can share it with your friends. All right. I've always done a market outlook at towards the end of the year, but this round, partly because I was a little bit lazy, I took a long holiday at the end of the year last year, right? But I think that we will have a little bit more idea, all right, about the movement at the start of the year. Okay. And I know that this session is for my students, but we have also people new to us. So I'm just going to talk about the development that we have in terms of trading, especially, you know, that I've been working on the Grid EA. So I just want to talk about it. All right. It should be launched, but there's still one more bug that I need to fix, and it has been very slow in fixing the bug because once I fix one and then the other one appear. Okay, so anyway, let's get started. All right, so the disclaimer here, all right, just to let you know, whatever that's been covered today, it's educational, not any financial advice, all right, and I'm not qualified to provide any financial advice. All right, for those who are new to me, just to let you know, I've been training for a long time, trading for a long time. I have my profile here, but I guess that what's most important is that I am me, still the same. I don't think I've changed. Some people say I should not use my photos 10 years ago. I should use the photos right now because they look a little bit slimmer and younger. I hope so. Today I just went for my, I rather just gotten my result for my body check because I do that every year and all perfect. Still haven't developed anything yet, so I'm happy. So I hope that all of us be very happy and be very healthy. Okay. All right, so let's get started. So a bit of an introduction, which I always put up. I guess that I'm one of those who are in multi assets trading. Okay, so I do stocks mainly in Singapore. Singapore is mostly REITs, I will have to say that, but mainly in Hong Kong and then some US. Okay, but US is mostly in options and stocks. All right, mostly as a seller in options, but what's I'm most active in is actually FX and also some of the commodities. So I guess that I would be considered as a multi-asset person because I'm also doing a lot of intermarkets, like intermarket analysis, intermarket type of a training. All right. And one of the things I've taken especially a lot of interest is automations. I guess that if you look at the methodology that I'm encouraging, they are all capable of either fully automated or partial automated. All right. So today, just to give you a bit of an idea here, and because whatever that I'm going to talk, it's going to be very diverse. Okay. Now, last year, what I did was, I think I warned you guys about that US is going to drop. US market is going to drop. I've calculated, a likely support level and taught you guys how to do that. Justified why I think that US is going to drop. Now, this round, I'm not going to cover anything of US. Okay, just to let you know, because I thought that it's not a very ready market right now, and perhaps that if it's ready already, then we talk about it like another mid-year market outlook. How about that? Okay, so today I've skipped totally the US market. Right, I only talk about markets that I think are ready to be a little bit more, time sensitive. Right. So let's take a look at what I'm going to talk about today. I'm going to talk about the interest rate 2023. All of us are concerned about the interest rate, and basically last year interest rate was rising and it hit me also, even though I know about it, right? But it's very difficult to get out of these long-term loans. So some of my bonds, some of my bond yield, all right, is actually in fact lower than the interest that I'm actually paying. Okay, so I'm just going to present what I think about 2023 interest rate, all right, and also how it's going to affect Singapore REITs, all right, and then gold and oil, which coming from the fundamental reason. Right, and why I think that Hong Kong and China market would be the key market to look at instead of US market. Okay, and of course that a lot of us are in Singapore stocks, and one time bomb that you should be looking at, and as well as developments going forward for us in our community. All right, now the session is recorded, as in it's right now streamed to YouTube. And you are able to view it later on, not in the same link, but we'll just release that link again in our website. Okay, so if you are here because of either the email, then we will send an email to let you know what's the new link and you can view it. Or if you get to know us via, let's say, Telegram or WhatsApp, then we'll be actually announcing that again. Okay, now let's talk about interest rate 2023. If you do have any questions, just ask me at the chat box. Okay, but in order to chat, in order to type something, you have to subscribe to our channel. Please, if you have not subscribed to our channel, please subscribe. Just press the button and subscribe. All right. Okay, interest rate 2023. I've given here a Morgan Stanley prediction of the market. So briefly, what Morgan Stanley said, right, is that they expect that the interest rate to peak by 4.5% to 4.75%. Okay. Now, and holding that level through 2023 and to steadily decline 2024. Now, this we know. Okay, we have seen the effect of interest rate or the expectation of a possible peak of interest rate with a possibility of a decline, all right, in 2023 coming through the stock market. Okay, the stock market actually rebounded because a possibility of a reduction of the rate or even a pause of the rate, all right, and also, right, you start to see the dollar actually coming down. Okay, but what I wanted to do is these are people sharing their view. Okay, what I want to talk about is factual stuff so that you can take this and go back and use it as and when you need to. Okay, so let's talk about this yield curve inversion. Okay, so what is yield curve? Now, usually when we buy a bond, which is a shorter date bond, right, the interest that you receive, which is a yield, would be lower than if you were to buy a longer dated bond. Okay, so it's the same theory as, for example, if you put money in a short-term deposit, fixed deposit, short-term fixed deposit. The interest that you received from the short-term fixed deposit would be lesser than the interest you receive if you put it on a longer term fixed deposit, right? So if you put 3 months, you probably get lesser than versus if you put, let's say, 3 years. However, what's happening to the yield right now? Okay, it's inverted. Okay, the meaning of inversion means that when you put let's say a 1-month bond yield, or maybe you put a 6-month bond yield, right? The US Treasury yield curve, so this is a US Treasury yield curve, right? It's giving you about 4.7%. So the shorter months are giving you more yield versus if you put, let's say, a 10-year yield, right? It's actually giving you only about 3.48%. Okay, so this is the meaning of yield curve inversion, right? Now, the question is then why the yield curve inverted and why is it important? So to know that, we have to know that the inverse relationship between yield and price. That means that when the price goes up, okay, that means that when people keep buying the bond, it will cause the price to go up because there's a demand, and then price goes up, and then the yield would actually goes down. Okay, now when you have the yield going up, all right, that's because people are selling that bond. Okay, so price goes down when people sell the bond, all right, and therefore the yield goes up. So they're inversely related for yield and price. Now then, in this case here, why is it that the long-term yield is falling faster than the short-term yield? For only one reason, partly because the Fed is increasing rate. But one of the key reasons is that there is actually a surge in demand for long-term bonds. Okay. Now, why is it that there's a surge in demand? That's because investors have been shifting their money to the long-term bonds. Okay, right? Why are they shifting the money to the long-term bond? Think about that. If you are positive about the current short-term outlook, you would be buying something that's in the short term. All right. Now, what investors are doing right now is that perhaps they are not too positive about the current outlook and they want to lock in the rate in the future. Okay. That means that instead of they locking, therefore what they're doing right now is that they are rushing in, or rather they're buying more of the long-term government bonds. Okay, long-term bonds, all right? So this surge in the demand for long-term bonds signal one thing, right? Investors are less willing to take risks. Okay, therefore, we start to see that yield curve being inverted. Okay, so they are buying more of the long-term bonds, resulting in the long-term bond yield actually coming down. All right, so as a comparison to the short-term bond, all right, you find that we have this yield curve inversion. Okay, now typically when you have a yield curve inversion, right, it signals a recession. So everybody knows about that. There might be potentially a recession. So these are what the analysts are saying. Okay, but I just wanted to let you know a background of why they are having this yield curve inversion, because they are worried about what's happening in the future. All right, going back to where you see in Singapore, a lot of people put money inside the fixed deposit, right? I actually told my mother to put the fixed deposit for the longest dated period. That means there are some people who are offering 12 months, right? Some banks who are offering 24 months. I actually put some money inside the Singapore government bond and lock it for 10 years. Okay, because I'm actually thinking that perhaps, right, there's no way that I can get that high of interest rate now. Okay. Now, I also want to talk about one thing is that if you look throughout what the Fed are saying, have been saying, or what the Fed said previously, they are always slow in a way. I don't want to say they are always wrong, but they are always slow. And in fact, throughout the past period where Fed either cut rate or hike rate, they have gotten a lot of Fed members to keep talking about the same story, all right, to insist that they won't be cutting, to keep saying that they will keep things stable. And after that, right, they would change the other way, and then because the market sort of indicated to them what happened in the future. Okay, so the market seems to be always right and the Fed is always wrong. I just want to say this because a lot of people might think that, hey, look, whatever that we are seeing here of the yield curve inversion, all right, is against what the Fed is talking right now. The Fed say, no, I'm going to keep rate high. Okay, but remember, the market so far has proven correct in the past, right, that Fed has always been wrong. Okay, so that's my stand here. But let me just give you a little bit of a proof, more proof, okay? Right now, this is a 10-year Treasury yield minus away the 3 months yield. Okay, so it's a 10-year and 3 months. I think I've shown this yield curve to the Alien Room members, all right, whenever you attend my session. And when the yield curve inverted, I actually talked about that, okay, last year in December, November. Okay, now, then versus a Fed fund rate, which is the Fed fund effective rates. Okay, so that's the fund rate of the Fed. Right now, what's important is the green arrow here. Whenever the blue line, which is the 10 and the 3 month, 10 year and the 3 month, went below zero, that means it gets inverted. Okay, below zero, right? At the point that I pointed out, then you start to see that the Fed fund rate peak, meaning that every time it's went to below zero, it would be a place where it will peak. Okay, so this is where it peaked in terms of interest rate, and after that, the Fed fund rate actually comes down. Okay, then here we have the inversion, and then it peaked, all right, and it came down. And then here we have the inversion, it peaked for a while, all right, and then it came down. And then we have the inversion here again at 2018, and then it came down near to zero. And then right now we have the inversion. Okay, so far, the yield curve inversion of 10 and 3 months, 10 year and 3 months, had been very accurate, okay, in predicting one thing, okay, in predicting that recession is likely going to come, okay, because the gray bar, the gray shaded area, indicates US recession. So therefore, a lot of analysts said, right, either the US is going for a recession, but they put it in a way that's a little bit bluntly. They said that US might avoid a recession. Okay, so I mean, I do not know about the future whether there will be a recession or not, but they said US might avoid a recession. So we've been, it's good to follow the yield curve. Okay, and you can get this yield curve from this place here, all right, and generate and to see whether the yield curve continues to invert. In fact, that it continued to invert and is right now still at the negative. Okay, the only thing is that after the inversion, it takes a while before you start to see the yield curve. You start to see that the Fed rate, right, comes down. It doesn't immediately say that it inverts and then the rate is going to come down. Okay, so I did a little bit of tabulation. It takes about 6 to a year, right, for the fund rate, that means for Fed to react and then for it to come down. Okay, now recession might happen earlier, all right, before Fed actually move rates down, or might happen slightly later. Okay, so it's hard to say, but anyway, that statistic. Every time there's a inversion, there is likely to be a recession and likely to have the Fed rate coming down, and we have the inversion right now already. All right, if you do have questions, you can just ask me along the way. Whether it is true that the US economy is in recession, stocks will be a bull market. So far, the stocks would recover because when we have a likely recession, it's likely to be triggered by something. Okay, so let's take a look at this particular slide here. All right. So in order for Fed to react, that means that after there's a recession first, or either is triggered by something to result in a recession, what the market is telling us right now is that whereas Fed talks, the market is buying into the long-term bond, okay, locking into the yield of the long-term bond. Okay, so there's a difference between the two things, where Fed is talking, but the market is actually buying the long-term bond. All right. Now, but you realize that when I overlay the chart here with crisis, okay, you realize that every time when the yield curve invert, there is a crisis going. There was a crisis. Okay, so that's the scary part. All right. So, for example, in 1990s, okay, where we had 1990 here, where we had that inversion. So this was that inversion here, right? Okay, we have the Japan bubble burst, recession in the West, and then the UK housing crash, etc. Okay. Then towards the 2001, so another one more yield curve inversion, we have the dot-com bubble burst. All right. Then here was the 2008 and 2009, where the US housing collapse. That's basically the subprime, and then triggered, and then we have a series of QE. That was also a crisis. Okay. then here, although we don't really have a crisis going on, it was a worse year for the global asset. Okay, and then now we have another one more inversion here. You start to think, all right, you want to really wonder whether there can be any crisis here that would trigger, all right, a recession, or a recession trigger a crisis, and therefore trigger the Fed to react and all the central bank to react. So that's something to ponder about, something to be scared about. Okay, so by right, a lot of people, they are saying that because of a recession, Fed is going to cut rate, okay, or at least to stabilize rate. So people are very happy, all rush in to buy stocks, okay, and therefore the stock will be a bull market. But if you overlay historical events, then when this kind of things happen, a lot of time is where you might have a crisis happening. Okay, so I want to bring this out as a thought, okay, because I know that a lot of us are very bullish on the stocks, but in any case, I will highlight one possible crisis, okay, which I call a time bomb. All right, I hope that it doesn't come true, but if it does, then I think that will be a huge one. Okay, so that's why I said I wanted to wait a little bit to do this market outlook. Okay, now let's talk about this movement of the interest rate. All right, so this is the Fed CME Fed Watch 2, which means that they publish the probability of what the market is thinking right now, all right, in terms of the rate hike or the rate movement, right, for the next Fed meeting. Okay, so I just wanted to bring out this one here to give you a bit of an idea in terms of the movement, in terms of the rate, right? So as of the day that I did the slides, which I think was 2 days ago, so they think that on the 1st of Fed meeting, all right, the first meeting for this year, 98% of the people, all right, think that there would be a 25% basis point hike. Okay, because the current rate right now is 425, 450. So they are thinking that the the coming meeting, right, would be a 25% basis point. Now, usually this Fed Watch 2 is quite accurate. Huh? They tell you this high percentage of people, usually it's like 100% accurate if you have this like 98%. Usually when you had about 75% or 80%, all right, that's almost equal to confirm you're going to have a 25% basis point hike. Okay, all right. Now, then what are they thinking of in terms of the March rate hike? Okay, this is more important because every 3, 6, 9, 12, right, of the Fed meeting includes a dot plot. And that would be a little bit more important. Okay, so what they are thinking that 84% of the people right now think that by March, Fed would have the target rate to be 475, 500. That means that if we really going to have a hike, right, in the first meeting of 25 basis point, then by March, you're going to hike again by 25 basis point. That's what they are thinking of. Okay, so we are looking at right now the first 2 high as 25 basis point. Okay, so that's what the market is thinking, and I believe that this very high percentage is going to be true. Okay, so if you can start to see the rate hike, right? Okay, you start to see actually it's plateauing. Okay, in terms of the Fed rate, it's just going up a little bit and probably in the bit of a plateauing. All right. Now, if Fed doesn't hike by 25 basis point, it doesn't hike, that will be good news. Okay, but even by hiking 25 basis point, I think it will be a good news for the stock market in March. Okay, but I just want to highlight is that the market will always react earlier. Therefore, that would be already reflected. That means that by now we will be trading into the first meeting. Okay, so that had already been reflected in the current stock market already. That means the market probably priced in that 25 basis point rate hike, which is good news. Okay, now if you take a look at the next one here, June meeting, I just skipped the May and the June meeting, right? Now, that's where the numbers starts to get a little bit different. But again, if you take a look at here, this one, 50% of the people think that by June, right, it is not going to hike. If in March, it's going to hike by another 25 basis point. Okay, so that means that now till March, it's going to hike 50 basis point. By June, right, people are thinking that perhaps no hike, or at most, all right, to hike another 25 basis point. So we are talking about a 75 basis point hike, not affect already. Even 50 is hard, but perhaps that by June, Fed might be pausing the rate hike. Okay, so that's so far the development. All right, and I think that this is quite possible if you read these together with the yield curve. Okay, all right, so good news for people who are borrowing money, whether you're borrowing money for properties or etc. But I think that we are quite certain, or rather, I'm quite certain that we're gonna see a lower rate hike. In fact, by June, or maybe hopefully a little bit by March, right? We might by May, we might have a pause in terms of the hike. Okay, now I just want to talk about why the looking at the yield curve. Okay, looking at the difference between a 10-year and 3-month yield spread, right, is very important. Okay. And especially the inversion is very important, because I've tracked the inversion, and when it started to invert, I already let my community knows about it, and I said we monitor. And that was the reason actually last year in October, I brought up the need to look at REITs, okay, because REITs was actually very, very sensitive to the interest rate. So last year in October, and then also to look into the Chinese market. When you start to see that the yield curves inverted somewhere along this October period here, okay, October 24 was still positive, but 25th, right, it's actually inverted. And I said that for inversion, we need to monitor for at least a week to confirm that it went firmly underneath, right, below zero. In fact, that starting from November, it went negative and still right now negative. Okay, you look at the reversal of STI. Okay, it happens around 25th of October, and the reversal of the Hang Seng Index. Okay, that happens about 31st of October around here. It's a V-shaped reversal. Okay, I'm pretty much confident the market is right now playing that possibility of a interest rate pause or reduction. Okay, that means since last year November, the market is trading this theme, and as we move nearer into Jan 2023, the market is sort of like hook. Okay, I just wanted to be a little bit pouring water on this one. Now, what if? Okay, so we have all the statistics to say, hey, look, there's likely to be a pause and a possible of reduction in rate, right? Now, what if it doesn't? If it doesn't, and you didn't manage to get in at that turning point, and you are a little bit slow, right? You might be just trapped and caught. Okay, so that's why I'm trying to warn you here. You are not at the start, right, of that turning point. If you are buying in the stocks right now, okay, unless for sure we're going to cut rate in June, all right? Otherwise, based on what the market is expecting right now and trading in before it happened, all right? If the story is like this happening, as what I say, as what the market is predicting right now, then the stock had already reacted beforehand. Okay, so it's important to be a bit contrarian. Okay, and it seems that the stock market is very sensitive to the interest rate. Not seems, but it is. Okay, so I need you to monitor into the yield inversion. All right, if there's one piece of news that you need to know what is happening to that 10-year 3-month or 10-year 2-year yield spread. and to monitor into this piece of news. Okay, and remember, what if this rate pause doesn't play out? Okay, then you buy now. You're actually buying at the top. Understand? Okay, so this is a very strong message that I'm going to deliver. So, and I will be delivering it throughout the session here. Okay, what if it's not true? Okay, now then let's come into the Singapore REITs. Okay, now because I monitor all this, therefore, just give me a pat on my shoulder. Therefore, on the 28th of October, I did this video here, okay, to look for Singapore REITs in 2023. So that means in 2022, I did the video and I say, hey, look, these are the 8 REITs, right, that you should be looking for. Okay, and you should be looking at the REITs now, right, because then we have this possible U-curve inversion and people would be buying that reversal in the worst hit sector, which was a REIT in 2022. Why? Because then that's a huge discount. Okay, remember in 2020, 2021, everybody was rushing for the REITs and it was very high already with the yield being so little. All right, then now the REITs corrected. Why aren't we looking at it with a possibility that potentially the interest rate might pause? Okay, anyway, the market is always reacting ahead. So just to let you know what happened to the REITs, all right, we caught that at really the low. For example, Ascender REITs, we 28th of October, that was the low point here. Just to mark this one, okay, we talk about this one here. You see, it actually went up so nicely. If you bought in here, all right, that would be a nice gain. Okay, so I've covered 8 REITs in total. The only one that doesn't move up a lot was Parkway Life REITs. Okay, so that's Mapletree Industry. This one is Kappa DC, also at the low. So this was Pan Asia. This one was Mapletree Lock, also at the low. And then Kaplan India. And then there's Kaplan Intercom. All right. And I know that you're going to ask me, can I still buy? So I ask myself the question first, rather than I let you ask, the question. What do you think? Whether can you still buy the REITs? So I answer the question myself. I think yes. Okay. So REITs is something that as a portfolio that I'm actually encouraging. All right. I think that people will still be trading into the REIT team. If you are buying near here, anywhere, right, would be the place at near the low. Okay, but let's paint a bit of a scenario. Okay, now the market is always like that. People will overreact on a piece of news. So why are we reacting right now? People will react right now based on interest rate is going to pause. So people are buying REITs. Okay, you see that V-shaped inversion. Okay, now what Fed will do is that Fed will come in every time to dampen your spirit, to say, hey, look, not true. We're going to hike rate. Okay, now, so when Fed comes in to dampen that possibility of a rate pause, okay, and the REITs corrected, that means it moves down, either you call that a retracement or correct, and that will be the point to pick it up. If you're looking for some recurring, dividend, okay, that means dividend payout, etc. Okay, so now it's considered at a high. Okay, now it's considered at a high, right? And you know that I don't know how to buy at a high. I only know how to buy at a low. Okay, now if you look at the price range, whatever they're going to pick up here on average, whether you're doing averaging, you are getting near the low, depending on certain REITs, but most of them you're getting near the low. Okay, but there will be still people who will come in to dampen the spirit, and that will cause REITs to correct. Okay, general. All right, and therefore I think that you should really be waiting for that correction. Okay, so later on under the Singapore stock section, I will teach you how to buy and where to buy. Okay, that means that what to look up for and exactly what to put in, so that you know exactly that level to buy. Right? Okay, so if you bought in at the low, okay, which I talked about last year, and you asked me whether it's time to take profit. Now it's at the high. Is it at the highest point? I don't think so. But is it probably at a temporary high where maybe that when Fed had that meeting, right? The first meeting in 1st of February, maybe people react to it and they will take profit. Okay, and that's where all the consolidation would come, and then they will be looking at what happens in March. Okay, so along the March Fed, right, and March there'll be some time, right, especially when you have the REITs reporting, in its reporting season right now. Okay, so you might want to, they might collect that dividend, and after that, then you can say, okay, lock in the dividend, and you can sell, and then wait for another dip to come in. Okay, all right. So still, I think that in a possible rate pause environment, I want to look at this sector which is very beaten, and that's REITs. Okay. Well, you can take the REITs ETF. That's not a problem. So you don't need to choose. All right. But in terms of REIT sector, I want to look at two main sector here, or three mains. Okay, one would be anything that's travel related, or shopping center related. Okay, I like diversification. Therefore, maybe like Mapletree Pan Asia or CapitaLand in Intercom. All right, commercial, and then with presence into China and India. Okay, so these are the focus that I'm actually looking at this year, or rather last year, starting from last year. You look at the 8 REIT lists that I've talked about, okay, you realize that they all have this common theme, either China, either India, or either they are a bit of a mixed commercial plus shopping related. Okay. All right, so that's sum up. Okay, so let's talk about gold then. Okay, now gold, some of you are looking at trading. Okay, but this particular slide here, all right, what I'm looking at, it's not really into trading. It's more into investment, really. Right, and for those students who have been with me for longer, you know that when I was pregnant with my daughter, right now she's primary 4. So what age is she? 10 years old? Or 11, 10. I think 10. Let me see. Yeah, 10, coming to 10. So that was the time where I bought gold, physical gold. All right. And the average price of my gold purchase was probably around 1,002. Of course, I had my first purchase during my wedding when gold was about $600. So I refused to have a diamond. Okay, that means a no diamond. All right, I just want gold. Okay, so in case that anything, I can run away with the gold, right? Diamond also cannot sell. Okay, now what I want to bring up this is that the central bank has been buying gold at the fastest pace in 55 years. So maybe you have read this news before, all right? And this is actually very, very important piece of information, okay? Now, on the left-hand side, where is a chart, right, to show you the amount of gold that the central bank has been buying in 2022. Okay, so average for the past 10 years or 12 years was this amount, okay? But suddenly, there was a shot up, a huge rise, surge in the quarterly net purchased in gold. Okay, now just one piece of information here that I extracted. The last time this level of buying was seen marked a historical turning point for the global monetary system. 1967. Okay, European Central Bank bought massive volume of gold from the US, leading to a run on the price and a collapse of the London gold pool of reserves. That hastened the eventual demise of the Bretton Woods system that tied the value of the US dollar to the precious metal. Okay, all right. Now this is a bit of a background information to let you know, but in terms of this, this is another one more statistic to let you see over a period of time how much the central bank has been buying. In fact, that 2022, right, the one that is the darker bar, right, marked really a drastic increase in that purchase of gold. Okay, and in the 55 years, this has been the fastest pace. Okay, all right. Now then, as a chart from 1960 to right now, so how has been the gold price been moving? Okay, so just now we talked about 1967 Bretton Woods and then 1971, where there is a delink in terms of the pricing of gold, right? So after that, 1971, you start to see that gold price moves up here. Okay, and before that, right, there was a huge purchase by the European Central Bank. Okay, huge purchase. Okay, now right now, the huge buyer, right, are not the U.S., not the uh, uh, European side, but the Asian. Okay, so we know China and Russia, but a lot of some small little Asian countries have central banks have been buying gold. Okay, so this is a long-term price chart. So gold basically from that Bretton Woods thing, it just went up from 30 something dollar all the way to this price here. Okay, and then stabilized. Okay, I probably bought it my wedding ring. I think here. Here. I think here, somewhere around here. Okay, and after that, I think I bought again here, 20 somewhere around here. I can't remember where I bought. Or is it here? Where am I? Oh yeah, here, correct. This one, 2013 was where my daughter was born. All right. Yes, correct. Yeah. Okay. So the pattern has been like that, a basing pattern. Okay. Right. So I'm just gonna clean away my stuff. Right. So right now, interestingly, okay, what is the very nice pattern that you guys are seeing right now at this part, this one here. Okay, so this one here, in terms of chart pattern, this is a broader term of a chart pattern, plus again that central bank has been buying a lot of gold. All right, and that really caught my attention. Okay, and I think that you would be able to recognize this pattern. It looks like a cup and a small little handle here. All right, yeah, so I think that we can't ignore this cup and handle, and probably there was a little bit of a cup or whatever basing pattern you want to call it here, right? So far historically, all right, it's like a very nice basing pattern. Yes. Okay, so my grandmother used to collect, or rather used, I when my grandmother passed away, she left a lot of this 50-cent coins, old coin, 1967 to 1971, very old one. So I have a lot of that because I actually took that. I bought it from my uncles, okay? And I realized that one can be sold in Lazada for about $7 to $8 per coin. All right, I really hope that at that point of time she can collect some gold, okay? Because if she had collected gold here, right, gold was, less than $100. Right, and right now it's actually about 1,009, 1,008 plus 1,009. Okay, now if this cup and handle really becomes true, all right, and really that because of that huge surge in the purchase of the central bank, I think the gold is one thing that you might want to look at. So take the diamond, sell that if you can sell it, and convert to gold. All right, or if you want to have gold bar for your children, all right, then don't buy it from the jewelry shop. Go to UOB and to buy it, so you don't need to pay GST. Now GST is 8% in Singapore already, and you get at the spot rate. All right. Okay, so let's talk about then gold prices. I'm not talking about for trading more of the long term thing. Okay, so gold right now is near to the high, about 1,009. So if you see this part as a handle like this, all right, there might be a lot of fluctuation here and there okay, so I'm looking at long term. All right, so that's probably 1,500 plus might be a good price if we ever get there. All right, or if not, then probably long term might be about 1,007. Okay, I mean, it is I always, that people ask me, should I buy the ETF, etc. when I buy from UOB, it's quite near to the spot rate. So I really, really love sometimes to open my safe and show it to my daughter and say, see, I got so huge pile, right? so it makes me a little bit happy about it. So rather than to buy the ETFs, I prefer to buy gold bar. Okay, so in this aspect, I'm a little bit more traditional. Okay, but even if you buy gold now, it doesn't have interest lah, just to let you know. But just back of the mind to know that central bank has been buying a lot, and the last time we've seen that, there was a huge change in gold prices. Okay, any question on gold? So diamond no value. Now I also don't know why my I don't have diamond ring. So luckily, okay. Okay, now so next one I'm going to talk about is oil. Okay, now this piece of news here. All right. You know that in order to help with the inflation, and also because of the war, Ukraine and Russia war. So the US under Biden administration has been releasing the oil reserves. Okay, oil reserve, right? But the recent piece of news that's just about a few days ago, all right, starts to say that Biden administration is planning to refuel the strategic petroleum reserve. Okay, you start to see, for example, that oil price doesn't really want to come down. Okay, all right. So this has been something that I'm talking about, but it's coupled with some news here. Okay. Now, what I'm trying to say is that if you take a look into the chart of oil, so this is a chart of oil, it's a long-term chart of oil. All right. So this is a weekly chart, and our typical way of looking at prices is to look at it from quarter to quarter. I will answer the goal later on. All right. Then from here, this was the support. There was a bit of a resistance here and a support, and interchanged with a bit of the support and resistance. Okay, so it's to me that yes, it's down. All right, it has corrected, but the current movement here is a correction of this uptrend. Okay, all right. So if you are looking at going back in the fundamental, where if Biden is going to buy the oil reserves, right, to top up, okay, because it has been releasing, right? So if that bill is going to pass, okay, or anyway, whether it's passed or not passed, he will just buy it and top it up, right? Then we might see the bottom of oil right now. Okay, now we saw the bottom of gold last year during November. So from 1,007 went up to 1,009. Okay, and having the same formation, it consolidated basically on that quarterly levels for a while before surging up. Okay, so with this piece of news, I think that fundamentally, at least for the first half of 2023, I do not think that oil is going to come down. It's going to probably just hover up, down, for trading. But overall, oil is probably going to be up in at least the first half. Okay, so going back with this piece of information, you can be trading into the oil itself, or oil ETFs, okay, or oil related stocks. All right, so these are the few things that you might want to consider. In this very simple chart here, I just want to bring up that if you are doing stocks and you're not trading into oil, but then you're doing stocks, right? So look into the oil stocks, because the oil stocks is going to benefit potentially if oil is going to go up. Okay, all right. So I won't be talking about which oil ETF. Basically, the popular oil ETF is OIL, oil, just oil. All right, but I would think that you might want to consider oil at least in the first half of this year. It could be coming up as news. Okay, So for gold, yes, Robo Mom SG, I think that she works in a bank if I'm not wrong. Okay. Anyway, last year I talked about the buying gold, and yes, I buy from UOB. Must be the main branch. It cannot go to any of the other branch. Is it UOB 2, the left side, the one that's further away? There's Plaza 1 and Plaza 2, right? So I think it's at the basement. Okay, basement. You can bring cash to buy. You can deduct from your account. You can buy different patterns, gold bar, kilo bar, 100 gram. 100 gram is actually very, very heavy. Or the kilo bar or the nuggets. The larger size that you bought, the cheaper the spread would be. Okay, all right. Yeah. Okay, how about silver? Silver, I guess that silver is going to probably still going to go up. All right. But if you want to buy physical silver, right, then you have to buy a lot of silver to match that gold thing. Okay. Personally, I want to follow that piece of news by the central bank. And I personally would want to be looking into gold and not silver. Partly because I also have silver. And I find that silver very heavy, and then buying very heavy stuff very difficult to store. Okay, so I prefer gold. Yeah. The amount of money that I have don't need to use luggage. Okay. You can follow Buffett oil stocks. You can buy oil ETF. You don't know what to choose. Okay, I won't be recommending specific stocks here, but later on I will be teaching you the method to choose. Okay, that means that if you have oil stocks, you can use that same method to choose whether you want to buy that or not. Okay, so stay tuned until the end of the near towards the end of the session. Okay, I'll teach you. I will show you that. Now this one is Hong Kong and China. Okay, Hong Kong and China. All right. I'm only interested in gold. Okay, partly because of the huge purchase by the central bank. The other metals I'm not interested. I will probably treat it as just a trading. Yeah, silver is just trade. I buy gold for investment. That means that to really keep it. And I think that if I keep it for another 30 years, maybe not, maybe 20 years, then I can sell all and then maybe to just spend all my money. Okay, I decided today. That means that to really enjoy and then not keep all my money for my children. I want to spend it on myself. All right. Okay, so let's talk about this one here. This I'm not sure whether you've seen this one, but this is basically a tracker, all right, of the money flow into the emerging markets, all right, with the special emphasis into China equity. So we have the red color here as EM debt. That's basically the not the equity but the bonds, and then the emerging market equities ex China, and then the yellow one would be China equity. Okay, all right. Now let's look at this one here. This was in 2020, where there was a rebound in the Chinese market. So this was the COVID. Okay, so there was a huge outflow. So anything that's negative will be outflow, below zero will be outflow. Anything that's above zero will be inflow of money. Okay, so the yellow color would be China inflow outflow. Okay, blue would be the emerging markets. Okay, you can see that this part here, that's the reason. And that will also explain why a lot of analysts, a lot of funds are saying to look into China and Hong Kong, and that has been one of the best market to look at. All right, so horizontal level here would be the average, and we can see a bit of a spike here in terms of the flow, the money flow into Chinese equity. Okay, so one of the remark is that the market are buying into the China is back theme. Okay, so if you look at the projection of IMF in terms of GDP growth, then the two key markets in terms of growth, right, would be India and China. All right, so that's one of the strongest flow. Okay, now so I think that right now we see a very hot Chinese and Hong Kong market. That's because a lot of people are trying to do few things. Number one, expect that interest rate would be pausing. Okay, so going back into the very well beaten down Chinese stocks and Hong Kong stocks. Okay, and second thing, right, is generally the money could be leaving the US. Okay, why was that so? Because money went inside the US, right, in anticipation of the rate hike. So they bought into USD, okay, because of a strong USD, right? And after that, now if US might be pausing, they might be selling the USD. So why? And when they sell the USD, because when they bought the USD, they might also park the money in the US stocks. Okay, so if they want to leave, let's say the USD, that means they want to exit the US dollar, then they would be selling into the money they park in the US stocks. Okay, to flow into a market that's cheap and also with cheap exchange rate. All right. Okay. Now, this one here is the correlation, and that's why I want to talk about currency exchange. Okay, and this isn't the first session I talk about exchange rate already. In fact, last year I said that if dollar versus CNH is to break 6.6, okay, then it's going to go up into the 7. And 7 plus minus will be looking at a buy into the Chinese equity. Okay, all right, so that was basically the statement that I talk about. At about 7 plus, it can be 7.1, 7.2, 7.3, all right, or even 7.4, right? That's where we look into the Chinese market. Okay, I talk about because of the money flow, right? Remember that? Okay, now, so if you take a look at this Hang Seng Index chart, correlated with the bottom, which is the dollar versus CNH chart, right? Okay, I want to explain this one here. Now, if we have the dollar, let me just get my pen, right? Okay, when we have the dollar to the CNH, near to the 7, okay, this is near to the 7, right? Now, what this means, dollar versus the CNH, right? CNH, equal to 7. It means that $1 US, you can get 7 RMB. Okay, all right. So the US dollar is very strong. The RMB is very, very weak. Now, essentially, when you buy with your US dollar any Chinese equity, every $1 you can get $7 worth of Chinese stocks. Okay, all right. Now, when you have a low exchange rate, that means that when the exchange rate is low, okay, so for example, it's at 6.3. Okay, what this means is that every $1 you can get only 6.3 RMB. Okay, now you find that every time when the dollar versus CNH is low, it coincides with a peak in the index. Why is that so? Because every $1, all right, you can only buy $6.3 of CNH. It's not worth it because then I buy lesser. So it's less attractive from the currency point of view. So therefore, I want to sell. Okay. Now, whenever the dollar versus CNH goes to 7 or 7 above, all right, then I want to consider to buy the Chinese equity. Why is that so? Because then every $1 can buy $7 worth of CNH, $7 worth of stocks. So in terms of money-wise, it is worth to buy the Chinese stocks. Okay. Now, therefore, I said this relationship before. Okay. Now, earlier, mid last year to somewhere in August, September, we saw that there was a spike, okay, of the dollar versus CNH to $7 and above. Okay, about 7.3 something, and then it came down. Okay, right now it's 6.78. All right, that coincide with a low in the Hang Seng Index together with the yield curve inversion. So it's more like things happening together at the same time. Okay, that's why I think that because of this change here, all right, even though the US market might be going up because of a possible rate cut, I think that the Chinese equities would be more attractive. Okay, that's why you start to see the money flowing inside. Not only because of the valuation of the beaten down stocks, but because of the effects coming into effect as well. Okay, many things in effect. So it makes sense to consider the Hong Kong and the China market now. Okay, right now, this year at least. Okay, so that's my opinion. My opinion sometimes will be wrong. Okay, all right, answer the question later. Now, if you take a look into CSI, which is China Enterprise Index, the same correlation was true. Okay, that means you start to see that the high in the dollar versus CNH, okay, coincide with a low in the stock market. Okay, all right. And right now, if you ask me, dollar CNH is at the first wave of a down, first wave, which also means that if you want to time your purchase in the Hong Kong stocks or the Chinese stocks, then the one thing that you need to look is dollar versus CNH. Okay, so anytime that the dollar versus CNH, right, it's up, okay, it goes up, right, and that would means a correction in the index, and that becomes your buying opportunity. Okay, Ken? Okay, I repeat this statement here. You want to time your purchase of the Chinese or the Hong Kong stocks, then one thing to look is the dollar versus the CNH. Okay, you want to see that if again, right, because of whatever reason, maybe the Fed talk it up or whatever, right, the dollar moves up and the CNH actually comes out. Okay, we call that a retracement. That means that you start to see these actually retracing higher. Okay, then it's likely going to bring a correction in that index, right? And that becomes the buying opportunity. Okay, at least for the first half of 2023. All right, if money continue to flows inside the Chinese market, stock equity. All right. Okay, then I know that you asked me, right, where to buy, what to buy. So assuming, yeah, so let's talk about a few scenario here. This is the Hang Seng Index. Just give me a minute. So this is the Hang Seng Index here. During 2020, the rebound after COVID, all right, Hang Seng Index moved up by 47.5%. So let me just get the pointer. Here, 47.5%. Okay, in terms of index point, about 10,000. Okay, now let's take a look at this rebound here, this one here, right? From the low to now, Hang Seng moved up by 50.9%. Okay, now by right, in terms of percentage comparison, I think it is near a high. That means that you see this near a high. Okay, all right. So, my suspicion is that there might be a correction very soon. It might come after or at or near to the first Fed meeting. Okay, because then it had already gone up by 50.9% already, and then it's near to this high here. So technically, this is the technical point. Okay. Now then, next you ask me, then potentially based on my prediction, how high can Hang Seng go? Okay, so we have two numbers here. One is to assume that the movement earlier, what happened in the past, right, was true, either a 47 or 50% increment or a 10,000 increment. Okay, so what I did was that to measure again into a 10,000 increment from the bottom. Okay, assuming that they are symmetrical movement, right? Okay, so these will bring us potentially for Hang Seng to go to around 25,000. Could be 24,800, 25,000. So that's a key marker here, and then it's near to this high. Okay, so that's the first, or rather the second point you need to look at. First point here, right? Now, could be that it is already near to the resistance because matching what happens in the past of 47.5% rise, right now is actually near to it. It's about 50% already. Okay, it's around there. All right, definitely you are not buying at the bottom because you're buying where people who bought here would be gaining about 50% already. Okay, so logically, they might want to actually, take profit. Now, if this doesn't stop and market continue to go up, right, then we have the next target towards 25,000. And that's where I think would be the two key levels for the Hang Seng Index, at least for the first half of 2023. Okay, and I'm pretty sure that 25,000 would be a very strong level, partly because of some technical, horizontal support resistance. Okay, so that's the first thing. Now, second thing, right, would be then, if there should be a correction, then what are the levels, for myself, I'm actually looking at. Okay, in fact, I sold a lot of my Hong Kong stocks already. All right, so I will be looking at this level here, which is very normal to look at. All right, depending on where price goes. Let's say, for example, if price is to correct right now, that means it comes down, boom, like that. Okay, so the 19 and the 18,000 would be the two levels that I'm looking at. Okay, so these would be the 19, so these would be the 18. Okay, now the other one is that assuming that, it doesn't stop here, it continues to go up and it hits towards 25, then if it ever comes down, then the 22,000, okay, which is back into this level here, would be the level I'm looking at. So there are two scenarios here. Okay, so I hope that I've explained the two scenarios properly. Okay, all right. Okay, so I will just pause here a little bit to let you ask some questions. But before that, let me just present the Hong Kong tech stocks a little bit first. Okay, using the same idea, Hong Kong tech, HS tech. I'm not talking about specific stocks, but basically just the general index, and to let you see how to analyze, more to give you that knowledge to analyze next time if you find the same thing happening. If you look at the Hang Seng Tech, HS Tech, which is the index that measure the Hang Seng listed tech stocks, like Alibaba, Tencent, Meituan, etc., then they've been going down. Okay, but one thing that's interesting was that towards the 2022 rebound, it rebounded by 48%. Okay, from the low to the high, about 48%. Right. Now, of course, that the date of this listing of this HS Tech is actually quite recent. Okay, so we don't have the 2020 data. But anyway, so let's take a look here. Like from the low, it went up here. Okay, so from this low here, it went up here, right? Now this time round, okay, one of the things to measure whether there is a change in trend mathematically, all right, is to measure the extent of it going up. Okay, so first number of the previous upright was a 48% and 1,674 points. Okay, now what I did, take a look at this orange line here, right? Now what I did was to measure from the low to that orange line here, right? And it was 1,671. Okay, now which means that at 1,671, symmetrical to the previous up, the market paused and was looking at this level. So the market really stayed at that rise of 1,671 and asked whether it can continue to go up. And in fact, these few days, it went up and it was supported, okay, before going up again for the tech stocks. Okay, now this was so far a weekly chart, which means that I'm pretty much convinced, okay, that based on this recent downtrend, there's this recent downtrend, right? The HS Tech, all right, had reversed this downtrend. Okay, this downtrend here, like this, that's the downtrend I'm talking about. Okay, because as I said, right, there's a lack of data. Okay, so repeat my statement here. I think that based on these numbers here, all right, and of course the 61% rise from the bottom, all right, that the HS Tech had reversed this particular downtrend. Okay, so if you are interested and you want to choose one sector to look at, then that will be the tech stocks in Hong Kong. Okay, all right, okay, then next entry point, I want to talk about that. Okay, entry point I will teach you in the next slide. How high can it go? Okay, because definitely when you buy, there will be some points that you can reverse. Based on my prediction, if I'm not wrong, all right, then there might be a chance that it's going to go up from here to here in the same symmetrical manner. If it does, okay, then we are talking about the HS tech, right, having a resistance around this level here, which is about 6,008. That means that for it to go up from the low to up here, right, about 147%. From the low to the high, about 4,000 points, okay, assuming that the trend is broken already, and then it might have a further distance from the orange line to here, okay, so that's about a 2,500 points movement, all right, where the calculation is quite convincing because this calculation brings us to the very strong technical level of a previous support, which is the low of the HS tag, and a very strong resistance here. Okay, so I think that personally, all right, the tech stock has a lot of attraction. If you are looking at buying bottom in general, all right, for the Hong Kong market. Okay, I will just pause here and answer some of the questions. Maple tree, whatever. As I explained, gold, the bigger unit you buy, right, the cheaper it will be. Okay. If interest rate discussion, if US dollar rebound after recent selling, how will this affect gold and bond? Also, your view on DXY. I think that DXY is going to head down in the long term, but definitely will be up and down for sure. I think I'll update my view on DXY in my lesson. Okay. But generally it's down. If US dollar rebound after recent selling, if it's rebound after recent selling, same as what I said in the dollar versus CNH, right? I see that as leading to a correction in the risk asset. That means, for example, in the stocks, and I see that as an entry point to buy at the low. Okay, all right. Mark asks, the Hong Kong China market has gone up a bit already. Yes. So I think it's very important to actually, I sell a bit, right, to join my course, because I updated the Hong Kong market November and talk about buying this market. All right. And this time round, I think my point is that it's near to the high. There should be a correction. We wait for the correction, but the potential is quite high if you look at my calculation here. Okay. I mean, the potential for it to go up again is quite high, especially for certain key sector. If I'm not wrong, HS Tech does pay dividend, but a little bit only. Just a little bit only. Okay, Richard, I get that. I will just request them. Is it worth buying gold now when it's already gone high? I guess that it's for long-term investment. So I gave some levels for gold purchased just now. 1,007, 1,550. Because I'm expecting that currently could be the handle of this big come and handle pattern. Am I personally looking at buying into physical gold? Okay. I mean, I'm not sure whether I would buy again this round, because to be frank, I had quite a lot already, a fair bit, an average price about 1,002. So I'm not sure whether I would want to buy. But if it ever goes to 3,000, I'll be very happy. But seriously, I'm not sure. Maybe if you guys want to go to UOB Plaza, maybe you message me. Maybe, you maybe I'll meet you there. Yeah. Okay. How about Fraser, Centrepoint REITs? Any view? Let's talk about REITs later on, okay? All right, next slide. So you asked me, apart from HS Tech, what would be a good way to get exposed to HS Tech? Buy the ETF, lor. HS Tech ETF, lor. Yeah, the ETF. So try to search for the ETF, lor. Later, I will just introduce a few ETF, huh? I mean, most of the time, if you don't want to buy into the stocks itself, you want to get exposure, you go for the ETF. All right. Okay, so this one here, if you ask me, all right, the one key sector I'm looking at, all right, and that's the electricity, okay, for China. So just now we talked about we talk about the stocks, which is Hong Kong stocks, which is especially that the Hang Seng Tech had reversed, okay? And if you ask me about China, what is one thing about China, all right? Then I think that we want to look at the electricity ETF. Okay, now I just want to extract this piece of news that's very, very recent, all right, from Global Times. Okay, so Global Times is a Chinese publication. Okay, it's like the message from the Chinese Central. Okay, 中央 so the message spoken in English. All right, so it's good to look at Global Time because whenever Global Time publish anything, okay, they would usually use this to test the market. Okay, so it's like the unofficial spokesperson of the Chinese government, all right. Okay, so Global Times said that electricity consumption predicted to rise 6% in 2023, in line with GDP expansion projection. Okay, in line. So therefore, if you expect that China and India would be the two economy and not US, right, to grow, okay, then you want to be looking first into the electricity ETF. Okay, so that's my thoughts. All right, and therefore I have two ETFs to talk about. And usually what you can do, right, if there are any things that you're interested to buy in terms of ETF, you just have to Google and say hashtag ETF. Okay, so the key about looking at ETF is the size of the ETF, the fund size. The bigger the size, the better it will be. Okay, so that's the general guideline. All right. So this is one of the clean energy ETF that's listed in Hong Kong, all right, and it has the one that is denominated in Hong Kong dollar and the one that's denominated in US dollar. So that would be one. Okay. Now, as you can see, recently it's moved up. So let me just share with you what I did on my chart. Okay, nothing to hide, just to let you know how I analyze. Okay. Now, I usually have a key marker. Okay, what is a key marker here? Now, this is a very newly listed ETF. Okay, so the data will not be a lot, but each of the price point that's been created will give me important hints. So for example, 2020 was a time where we have COVID, right? So a lot of stocks went to a low level. Okay, and then 2021, 2022 would be a time period where price was very much beaten down, okay, because of the development in China and Hong Kong, and at the same time because of interest rate. Okay, so stocks, right, that generally don't do well will display a price behavior that went lower than the COVID low. Okay, that means that if you look at human nature, if a stock is good, why would I sell lower than a COVID low when COVID was bad already? Okay, so I'm actually looking at stocks which do not generate a low lower than COVID low. Okay, so that's the most recent guideline. All right, so that's the first guideline. And remember this guideline: a stock that doesn't trade lower than the low of COVID low. Of course, that for example, this particular ETF here, it doesn't have that data because it's only listed in 2021. Okay, around there, right? Okay, but doesn't matter. Okay, at least it's consolidating and still trending upwards. But as a general guideline, okay, choose stocks which do not trade lower than COVID low. Okay, now the second thing of why I'm choosing this one is because of this quarterly boxes here. So each of the box that you see here, right, is a quarter, and this quarter box give us an idea of fund manager actually entering. Okay, we can see things like there was a low that's here, and then another one low that's here, right? And that was a retest into support, so very strong support here, right? But more important, right, is that the recent up, okay, it just started only just the past 4 weeks, right? Is that one of the key things that we always do is it must surpass the quarter high. Okay, that means that the first bar of the quarter. So for example, this was the first bar of the quarter. So this was the first bar of the quarter. Okay, first bar of the quarter. You realize that if you generally use this rule, you won't be buying into stocks, right, at the high. Okay, and what is interesting this time around is that the first bar of the quarter started at the low point. That means that basically last quarter, which was October to December, right, didn't really move a lot. It went flat, all right, and then this time around it started from the low point. It started to actually goes up. Okay, so that's generally a lot of Hong Kong and Chinese stocks are doing this year. That means that there was a lot of consolidation and a lot of sellers are actually being written out already. And then, the accumulation starts to come in. So we probably really at the good start of a lot of good movement here. Okay, so electricity, apart from tech, which ran a lot already, so electricity is something that I'm actually looking at. Okay, so this particular ETF, again, that whatever that I'm saying, just my thoughts only okay, is listed in Hong Kong with the code 2809. That's in Hong Kong dollar and 9809 USD. It doesn't have any dividend. It doesn't give any dividend. Okay, all right. So you can read about the ETF information here. So I'm just going to just paste this into the chat so you can just look at that. All right, and you can choose between the Hong Kong and the US traded. All right, and the charges, etc. Okay, all right. The second one that I'm looking at is a US listed ETF. Okay, so this is listed in US under the code CHIE. Okay, and you realize that while a lot of stocks are on the downside, on the low side, right? This one here, which consists of China Energy ETF, are near to the historical high. Okay, so it gives you a clue on the trend of this sector in general. Okay, and this ETF, if I'm not wrong, it pays a dividend. Okay, just check it out. So these are the two ETFs to help you, have a look. So different comparison. If you ask me which one I prefer, I actually prefer chart-wise, right? This particular one, the one that is listed in Hong Kong. Okay, all right. So let me just see what's the question. Okay, so there's not a lot of questions here. Some US tech ETF in the US. I actually buy the HS Tech ETF in the Hong Kong. So I don't know about US Hang Seng Tech in the US. I think you have to Google that. All right. Okay, so that's the two electricity ETF that I've looking at with preference into this one here. Okay. Later on, I will share with you how to enter, but you can put in the boxes, which is a 3-month quarter boxes. And then the opening bar that we always use would be the one that coincide with the vertical line of the box. Okay, just look for reaction around that bar. Okay. All right, now here we go. As I mentioned, right, if you are interested in Hong Kong stocks, then what will be my selection criteria? My selection criteria is actually very easy. All right, look for stocks that doesn't trade lower than 2020 low. So this is the COVID low. Okay, 2020 COVID low, right? Now this stocks is BYD, is the company that made electric cars, EVs and batteries. Okay, and so far it's Warren Buffett sold this company, right? I think somewhere around here, if I'm not wrong. Yeah. But so far it has been actually hanging quite well, right? I'm not trying to encourage, but just to share with you the purchase, how you want to look for any purchases. Okay. So same thing, look for one that doesn't go below COVID low. Okay, look for one that maintain this uptrending line. Okay, number 3, look for one that can beat its own opening bar of the quarter. Okay, now, what is the opening bar of the quarter? And this is a technique that we use in the alien wash. All right, and that's a very, very important technique. So for example, if you look at this box here, there's this vertical line, all right, and then the horizontal line, and it tells you the start of the quarter. All right, now, so if this is the opening bar here, all right, then a stocks, right, that doesn't close above the opening bar, all right, would not show opening bar high, right, would not show bullishness. For example, at here, it closed above the opening bar high with quite a long bar. And for the rest of the quarter, it's actually moved up. All right. Now, this point here, this is the opening bar, right? So this one, it actually closed below the opening bar. And then after that, it starts to go down. Okay. So the opening bar is a very, very simple way to gauge a price movement. Okay. So what happened to BYD? In fact, that I've actually shared this with my friend BYD, but then on these stocks here, same thing. The interest came because last year, all right, so this was the opening bar, and there was actually a close above it. Okay, that gave it some strength. But this year, so this was the opening bar. Okay, see that? This one was the opening bar, and it closed above it with a support inside here to test, to show that the previous opening bar that closed above was actually supported. Okay, and that's where just about 3 weeks ago, it became a very good entry point to buy. All right, now which also means that if there should be any correction, okay, then the opening bar high, the one that I marked in here, right, would be a good point for a wait, right, for retracement to happen. That means you want to wait for it to retrace, right? Or in fact, the previous high would be 2 key levels that you want to look out for. Okay, so how to know what stocks to buy? First, it must not break below COVID low. Okay, so that's the first criteria. All right, of course, then you do your own fundamental analysis. But in terms of timing, it shouldn't be too difficult. Look for the one that closed above the quarter opening bar high. Okay, again, that I will always encourage a retracement. A retracement will always happen. You always have a chance to enter on a retracement. Don't be in a hurry. All right. If you want to be contrarian, then you should be contrarian like myself. And when I talk about it last November. Okay. Now you want to wait for that retracement to happen. All right. Okay. So basically, this is how you choose and you select. Give you another one more example. So this, right, is my favorite. In fact, I'm still wearing the sport shoes. How many of you actually bought this brand, sport shoes? I tried this brand before. After I introduced it, nobody had. Not yet. Okay. But anyway, same thing. Must not break COVID low. So this was the COVID low. Must not break. All right. So it didn't. Okay, same thing. Opening bar. So this was that opening bar. So for last this quarter and this quarter, right? You realize that you don't need to worry. Never break the opening bar. Never break the opening bar. Why must we rush in? Okay. And last year, towards the end of the year, it broke the opening bar here, and you see that it just goes up wonderfully. And this year, it broke the opening bar, which means that these stocks, after correcting, fundamentally is very strong. All right. And a very clean price movement. So what we have to do is just to wait for price to come back down to the opening bar or just to the boxes here. Just mark and then do your alerts, right? Here, that means that, you can set your alerts in TradingView or anything, right? To remind you, then you just look out for $100, for example, or 110, for example. Okay, so always remember, don't be in a rush. Do that. You look for the opening bar, you look for the boxes, and look for stocks that never close below 2020 low, which is COVID low. Okay. All right, now with this, here we come. Same thing. Singapore stocks, there are a lot of stocks that you can select. All right. And I just want to talk about, especially into the REIT sector. But if you look at Singapore market, is one of the strongest. Apart from banks, I think that REITs, right, is one component you want to consider. Okay, and of course the STI is actually right now near to 3,004. Right, a lot of people didn't expect that to happen, but you know, it's not surprising. Okay, so same thing. If you can look for stocks that never beat 2020 low. Okay, so I just give you the criteria here, right? This one, 2020 low, never go below. Okay, first criteria. Now, in Singapore stocks, a lot of them, you are able to draw lines. For example, this trend line here, which I drew in my REITs video. Okay, so you can see that very nice upsloping trend line. So look for this very nice gentle upsloping trend line. That means it corrected to a very low point here. A lot of people rush in to buy REITs here, rush in to buy REITs here. When they talk about buying here, right, they all disappear. All don't know go where already. All right, okay, so no, I look at this point here to buy. So that is what I always do. Okay, all right. So what to look out for? First criteria, cannot beat 2020 low. Second criteria must be uptrend. How to know it's uptrend? Draw this gentle line here. Okay, very gentle line here in the weekly chart. You should be able to connect them. If you can connect them and price is near the low, you hit the second criteria. Okay, third, it must be above the quarter opening bar. Okay, I just give you example. So this was the opening bar of December period last year, last quarter. Okay, so that's the opening bar. You see, never beat that opening bar. Never buy. Right? So this year here, this one. Okay, you see that opening bar, it beat just recently only. Okay, beats. All right, so same thing, when it beat, that becomes the clue for you to wait for it to come back down, if it doesn't come back down, just wait a little bit. You will always retrace, but this is a very strong clue already to say that the market is looking back into REITs, because could be they are quite convinced of a rate pause. All right, okay. So let me just talk about this one here. Same thing, this is Kaplan. First, not lower than 2020 low. So this was the 2020 low, first criteria. Second, you are able to draw an upsloping trend line very nicely. See that? Okay, so you have this uptrend maintained already. So this one met, and above the quarter opening bar. Okay, so see this one here, this one, so this was the opening bar. See that? Okay, above it already, and it stayed basically supported in the whole of last quarter. All right, and what happened to this time around? It went above the opening bar again. All right, and then just yesterday or the day before, it was trading above the quarter high. So this, it's the added benefits, or rather the strength of this particular stocks here. All right, okay. So you just have to apply these 3 ways to scan for your stocks. It's not tough. You build a portfolio and you say, hey, look, doesn't beat the COVID low. It's an uptrend. I can draw this trend line here in a weekly chart and then use the opening bar. Okay. Some of you ask me where to get the name of this indicator. Actually, what's the name? I forgot already. Let me just see. It's called multi-time period chart. But if you're not paying for it, I don't think you can get the quarter. I think you might have to pay for it. Subscribe to this one. But anyway, you can just switch to the month chart to have that quarter box. Okay. But you can't get a quarter box with a weekly candle. I think you have to pay for it. Anyway, quarter box is something that we used in trading into our FX as well. Okay, it works very well, so good to have a look into the quarter box, or good to attend the Alien Wash, because there's a huge revamp in the Alien Wash already. I mean, as in the strategy. All right, okay, let's continue, because I only booked 2 hours of your time. 2 hours for a market outlook is actually very long. Okay, so we are 1.5 hours already. You discover that? We've talked for 1.5 hours. You stayed here to look at it for 1.5 hours already on a Saturday, Chinese New Year. Nobody going out? Visit? You can, yeah. Okay. Name again in TradingView. Okay, let's just take that again as multi-time period chart. Multi-time period chart. Typical my investment depends. If it's REITs, then what I will do is that I will buy low and keep on collecting dividends. But every time when there's a dip, right, I will actually buy lower. Buy low. That means at the key level, then I will buy. Then when it goes up, I would just sell some and then keep some. Okay, and then when it comes down again, dip again, I'll buy. I'll never buy the REITs when it's at the high. Okay, never. And you've seen my record. The previous time that I called to buy REITs was a COVID low, really at the low point if you bought in there. And then the after that, I don't do anything. Okay, I don't talk about it. And the previous round was last year in October where I published that video. So you have to pay attention whenever I talk about REITs. Okay, all right. Okay, yeah. Okay, here we go. This one here, time bond. Okay, now I just want to give you a little bit of an overview why I think that the yen as a carry trade is a time bomb. Okay, and it's actually happening right in our eyes. And I don't want these to catch you. I don't want these to hit you. And if this really happen, I hope that we can get away with it easily. Nobody wants a hard crash. All right. But if it ever comes in, I think that we can be prepared. So one thing to do that is that don't rush in to buy at a high, because as I said already, if you look at Hang Seng, it went up by 50%. So whoever who bought at the low already make 50%. Okay, so that's my sincere, advice. And if you look at what if the interest rate story doesn't play out, that means the Fed is not going to cut at all. Then that's the problem. All right. And I also want to warn you, recession might be mild, but every recession, all right, in the history was followed with a crisis. Okay, so let's talk about the carry trade here. Now, what is a carry trade? Basically, when we are trading, right, as a stock investor, we only look at one single currency. And then we take our own money and we convert into USD to go and buy US stocks. Or we take our own money and then we buy into Singapore stocks. We never think about the interest rate. Okay, but what a lot of international, a lot of banks, a lot of funds, they will do is that they have their own money, all right, but they can put it in the bank, all right, and because they can use it to borrow other currency at a cheap rate. So traditionally, this way of borrowing at a cheap rate, at a currency of a cheap rate, and then taking it to buy a higher risk instrument is called carry trade, and is being done predominantly with yen. Okay, that means that you borrow yen, all right, at a cheap rate, and then you take this to go and buy REITs, and you have, let's say, a return of 4%, 5%, right? So what happened is that the world, I'm talking about the world, right? Not only one person or just a bank. The world have been borrowing into yen, because then it's so cheap, all right, at 0%, 0.1, and then take this money and they go and buy higher risk instrument. All right, okay, carry trade. So it can be that you go and borrow yen, and then you go and put it and take the money yen, right? And go to the and then you take this, and then you go and put it into fixed deposit. Immediately, your differential is 4%. All right. Okay. So now to give you a bit of a background, and this is something where I think is very appropriate. Now, right now, what is happening to Japan? All right, is that few things are. Number one is that Kuroda is the one. Because Kuroda was selected by Abe, right? So the key thing is that they want to keep Japanese yen at the low, with the low interest rate. All right? Okay. Now, so what happened is that Kuroda is stepping down the end of term in April, right? Then during Kuroda times, right? I think that this article by Financial Times is really true, and I think the headline is it's bad, right? They say RIP is rest in peace YCC. So I said, wow, why do they write that? But then that's true. Okay, so let me just give you a little bit of a background. Now, what is YCC? Is called yield curve control by Japan. And why is it important? Just going to read out something that I extracted easier for you to understand. All right. Now, in Japan, right, they are fighting inflation issue, meaning that inflation keep on not going up. The target point for inflation is 2%. Okay, so Japan has been trying to stir its economy, all right, and trying to keep that inflation up, all right, but they can't do that. Okay, so what they will do is that they try to buy the bond, okay, in order to fire up inflation, okay, but not very successful. So what it did was that it cut the short-term rate to below zero in 2016 to fend off an unwelcome yen rise. That means they don't want the yen to go up. They actually want to keep it cheap so that they can continue to make the yen cheap and then hopefully can stir up the economy. All right. Now, so what happened is that BOJ, in order to make sure that they keep the rate at near to zero and the yen being cheap, right? They have to buy their own bonds. Okay. The bonds is called JGB, right? And so BOJ keep buying its own bond. Why is it that when they keep buying the own bonds, right? Remember we talked about that when the price goes up, okay, and then the yield would come down, right? So they have to buy the bonds. Okay, so they bought a huge amount of bonds to push the yield down. Okay, hoping to fire up inflation. All right. Now, so they came up with this YCC, which is the yield curve control, so that it allows BOJ to buy only as much as needed to achieve the 0% target. Now, however, Japan is facing a very stubborn low inflation, right? Okay, then BOJ basically bought so much that BOJ is probably the largest buyer and the single buyer of the whole JGB bond. Okay, all right. So this led to the bond yield became a very tight range, and the trading volume of the JGB actually decreased. Why? Because only Japan BOJ is buying, so it keep buying, and there's no other people buying, so they sell, they issue themselves and then buy themselves. Okay, so it's own self buy own self. All right, so that's the current situation. Now, if you take a look at what happened last year December that caused the yen to go up, okay, is that because of this YCC, they came out with a target yield of cap, right, of that bond. Okay, so they said that initially they widen, starting 2018, right, they moved to 0.1, and then after that March 2021, all right, they widened the band, that means a fluctuation of the yield, right, to 0.25. Okay, now in December last year, all right, they were under attack from investor betting on the rate hike, because all the world all hike already, left Japan don't hike, and Japanese facing a huge inflation, so they have the balance between being really inflated from what is happening in the world versus their own fight, right, to keep the bond rate down. Okay, and everything that the Japanese buying now is going to be very expensive. Okay, so what happened last December is that they widened that band to 0.5. Okay, you see, when they widened that 0.5, right, just this, it has been kept at 0.25, okay, whatever they want for 6 months. Okay, once they widen it, that basically pushed it, all right, to that 0.5, and it kept wanting to go above 0.5. Okay, that means the market kept attacking it, right? Because the market think that Japan cannot keep that 0.5, they have to do something. Either something has to give way. Okay, so therefore, that short-term rise in this JGBU actually moved up for the bond. All right. Okay. Then next up. Now, if you take a look at the 10-year U bond, it's really at the low point, and and really, they had a huge time. So during the first week of first 3 weeks just happened last week, all right, the market kept on trying to move it up above 0.5, all right, but BOJ actually spent a total of 32 billion just in 4 days, right, to fight off from that yield going above 0.5. Okay, all right. So if you take a look at the next chart here, what a lot of people are betting, right, is that swap. That means that they are betting again. And a lot of traders, banks, huge money are betting that something has to give way. Either they have Japan BOJ has to spend a huge amount of money to go and fight off these market forces, right, to defend it at less than 0.5. Okay, all right, which they have been doing that in the past last week. Okay, and they spent a lot of money and they hardly able to keep it below 0.5. Okay, so people point out, for example, the swap trade about 100 basis point. That means they're betting that they can't keep it at 0.5 and they're actually trading at 100 basis point already, indicating that the investors are confident that something has to give and soon. So either Japan BOJ cannot fight off that market forces to force that up, all right, or that they have to spend a lot of money. Okay, now so therefore they are expecting that either the YCC to give way, because YCC was under Kuroda period, and Kuroda is going to go end of term in April, so nobody knows who is the new successor. So the current PM Kishida would have to choose the new successor, and the news is going to come out very soon. So the successor is going to have a very important clue whether they will remove this YCC or they will tweak it. All right? Okay. And if this is true, then it will turbocharge the Japanese yen. We already saw that in last December, that they moved the band up by 0.25. It already triggered 15% drop against the dollar. All right. So imagine if right now the market is betting that it's going to go like 100 basis point. All right. That means from right now to the 100 is actually 0.5. So last year, 0.25 already triggered Japanese yen to be so much already. And then if it really go to 1%, then you know what's the impact. Okay. Now this would have a own ripple effect, all right, on any unhedged overseas bond purchase by Japanese investor. Okay. Now, what does this statement mean? You have to go back and link back to the carry trade. Now, a lot of purchase, right? Okay, a lot of purchaser is on here, this one. A lot of purchase, right, is based on carry trade. I just give you what is called a lot of purchase. Let me just jump this a little bit. Okay, so this one here is what Goldman Sachs said. All right. During the latest BOJ meeting, okay, they said that still with the BOJ set to upgrade its inflation outlook and continued market pressure, a more concrete shift in policy or setting of the stage for a future shift remains a risk. Okay, next, they said Kuroda term ends in April. Why suddenly scrape your own legacy on the way out of the door when for practical and optical reasons, it makes more sense to let your successor do it? Okay, this is a very important statement here. So what I'm trying to say is that Kuroda end of term is going to be in April. There's no way that based on Japanese type of style, there's no way that Kuroda would give a slap, all right, in his face to say I'm wrong. So it has to be his successor to do it. All right. So if they were to scrape YCC, or they would even move it up, right, then this would cause the yen to go up. Okay. All right. So Japanese yen will go up, will be one trade. And it might happen when the successor is named. Okay. It might not happen when Kuroda leaves at end of term in April. It might happen when the successor is named. So that's very important. They will name the successor somewhere either in February. Okay. Now the market is going to play on the successor track record, meaning that whether the successor is going to let YCC tweak YCC or is going to stop YCC. So they will start to speculate that, and that's the reason why you don't see the yen moving, because they're all preparing for a big thing to happen. All right, now this is the yen trade. Now next, look at this one here. Now because of the carry trade, okay, and back in 2028 here was the US crisis. All right, now people believe that the global liquidity before 2028 was due to yen carry trade, because people borrow in cheap yen, they go and buy in risk asset. All right, so the low cost yen finance higher purchase of the high yield instrument around the world. This includes traditional dollar denominated bonds as well as home loan in South Korea, stocks in India. And okay, this article never mentioned stocks everywhere in the world, including Hong Kong, Singapore, China, US, Malaysia, Thailand, whatever you name it. All right, that means the yen carry trade, right, is huge in the world. Okay, and people are still borrowing the yen because the Japanese yen is the cheapest in the world, and you just have to take the Japanese and put it into US dollar, immediately you make the money. All right, so once the crisis hit in 2008, investors dumped their risky asset and bought yen. Why is that so? Because then you want to go and return all your money, sell your risky asset to go and return the money. So the yen carry trade inflated the pre-crisis bubbles and aggravated the collapse. Okay, so this is a chart that correlates between the dollar versus yen with SPX, which is S&P 500 in 2008. Okay, so the blue line is SPX, the orange line is dollar yen. You see that the SPX basically make a double top, all right? But the dollar yen, right, had already fallen, all right, to give you the warning, because the world investors are selling their risk asset, okay, and moving the money back into yen, converting back into yen, they return the money, okay? So the dollar yen gave that huge clue to the movement in SPX, which is S&P 500, and you can see that very nice correlation during the first price movement or first crash, right, of 2008 and 2009 movement, the crashed before US went into the QE. So that was the QE of US that popped the market up, and the dollar yen continued to crash because the US, all right, pump money inside the economy, all right, even though the market was still selling their risk asset to go and pay the money in yen. Okay, now, so linking all these up, what is it that I'm trying to say? All right, if Japan cannot fight off the attack right now on that yield, okay, so they have to increase the bond yield to, let's say, 100 basis point. It will cause the yen to go up. Now, if the yen is up, then what will happen? It will cause that carry trade to happen, because people would want to sell their assets, their risk asset, and put the money back into the yen. All right, I'm talking about huge amount of money. All right, not a little amount of money. All right, so all this is going to come depending on who is the successor and whether they are going to able, right, to manage to fight off this attack here. So that's happening. Okay, BOJ already spent a lot of money to fight the attack last week and the week before. So whether they can continue to fight this, it's unknown. So this is that unknown risk, and if this really happen, and if there's an unwinding of the carry trade, that's likely gonna happen in, let's say, in April, or depending on how the policy moves, whatever. So this will cause a huge ripple effect into the stock market. All right, so if there should be a crisis that is going to convince the Fed to start to cut rate, then this might be the crisis. Okay, so the crisis might not come from US, it might come from US little brother, which is Japan. All All right. And because of this, then Fed would have a valid reason to cut. But before this happen, it's going to cause a huge stir in the risk asset, including the stock market. Okay. So that's what I'm trying to say here. Yes, correct. Okay. So let me just answer your question. So big funds are investing into Japan big time, especially when yes. Okay. Because it's low. Everything is low. So if you want to, there is really a inflation coming up, and if Japan is going to grow, all right, then real estate is actually the best thing to buy. If there's one thing that you want to sell, you are just pumping money into Japan, all right, and you might actually benefit from the rising yen. Okay. Will US allow yen appreciate while its own currency depreciate? I don't think that whether the US will allow or not. Let's put it this way. US can't control. Fed can't control. All right. But if you look at the story I'm painting, if there should be a rate cut, it must, or rather, there must be a valid reason. Okay. And where is that valid reason going to come from? It must be coming from something. Okay. And we look at some of the things I've talked about. Before a recession, there's always a crisis, or a recession happened, it caused a crisis. Whatever it's, right, that caused the rate to cut. Okay, so I want you guys to be aware of this movement in the FX market. All right, and if it doesn't happen, it's good. If it happens, then at least we know. Okay. How will the yen movement affecting SGD in case of a crisis? You can trade directly into the dollar versus thing. So you basically, because the yen will go up, right? You basically short the dollar versus thing, law. Yeah. Dollar versus yen. Yeah, you short it. So, but if you are asking me if there's unwinding of carry trade, then it will affect all market, all stock market. Okay, Singapore will not be spared. Okay, I repeat these because I went through that unwinding of carry trade before myself. Okay, at that point of time, no market was spared when the unwinding happened. Okay, I repeat this. All right. Yes, like what happened during the Asia crisis. So no market was spared. 1997 crisis where, yes, correct. So they used the cheap dollar to fund their emerging market assets. But traditionally the yen is a carry trade. That 1997 was caused by US dollar. That means cheap US dollar, cheap loan. A lot of Asian companies like Indonesian, Thailand, they borrow a lot of US dollar. And then when US actually went up in terms of rate and appreciated, and that caused all these weak companies not being able to return. This has been known as traditionally how the US harvested the market. Okay, in the Chinese they call this 收割, but they are trying to harvest it. This time round, US hasn't been too successful in harvesting because I think the market knows about this trick. But I'm just afraid that the yen carry trade might happen. Okay, when then the world economy get tipped into a recession phase. Yeah, I think, Anthony, I think this would be a valid reason where we enter into recession, and a valid reason for the world central bank to cut rate. Okay, there might be a crisis, there might not be a crisis, but traditionally we saw there was crisis and it happened, and this is happening right now. Okay, it's not reported a lot, much, not highlighted, but it's definitely something that's happening. Okay, if this crisis happen, where should we put our money? In your pocket first. Okay, I don't think that we can preempt, but I just want you to be aware of it. The first thing to aware of it, right, is to be aware of the nomination, at least to be aware in this piece of news. If you ask me where to put, I think gold. Gold. Okay, I really think it's gold. All right, gold might be affected because of margin call initially when this happened, but eventually gold will be the one that helps you with this crisis. Okay, and after the carry trade unwind, it's time to go back into that low stocks to buy the stocks. Okay, that probably gives you a reason, right, to pick up the stocks cheap. Okay, so you look at what I'm trying to say. Right now, all are high already. If you want to buy the Hong Kong, you want to buy the Chinese market, you buy last November. Okay, all right. Otherwise, hang on your purchase or just buy a little bit. And if you really see this carry trade and it caused a huge drop in the indexes, in the stocks, after the drop, that's your chance to buy in cheap. All right, okay. If it doesn't happen, then too bad. I'm sorry that I predicted wrongly, but I'm just telling you that this is a risk here. Okay, so there's a risk, and we cannot ignore this. Okay, because it's happening right in our eyes. Okay, all right. I'm not making these up because they are real. Market happening right now. It's just probably not within your understanding. Okay, what are the signs? So BOJ government also do not want the yen to strengthen too much. Otherwise, the export will be too expensive for the world to buy. Yes, they are trying to balance it. That's why you start to see BOJ actually fighting. But remember, central bank cannot win the market forces if there's a huge market forces there. Okay, all right. Especially we are talking about data from the swaps coming in. Remember 2028. The US also cannot fight the market forces. Okay, a lot of people were betting on the housing market, right? Crashed using the swap. Remember that? Okay, Michael Burry. Okay, so I think that they are using the swap and they're betting it already, right? So during unwind, all stock market collapsed, then Fed reduced rates and caused US stocks to rebound. Okay, remember if ever there is an unwinding in the yen trade, it's a bad one. Okay, it's those kind of very quick one, and you will definitely notice it, right? And do not expect that rebound to happen so quickly. All right, you expect a huge drop if ever happens. All right. Now I'm actually guessing. I won't say guessing. I'm actually telling you that we have this BOJ thing coming, okay, and linking that to carry trade, and also letting you know how much of the carry trade that's in the world and what I have personal experience. Doesn't mean you will come, I hope that it doesn't, because I remember when there was a carry trade, it was a bad time for myself. Okay, but a lot of you might be new, and you hadn't known of this before. All right, so probably via my market outlook, you know about it and you monitor that piece of news. Okay, I can only let you know that don't think if ever a carry trade happens, unwinding or carry trade happens, right? Don't even think of it happened today and tomorrow you buy in. Forget about it. All right, it won't happen this way. It's gonna be bad. We are talking about a huge move in terms of money. Okay. Let me just see. So look out for who is the new successor, Kuroda successor. Is this yen carry trade similar to US Harvard's? I don't think so. But let's put it this way. We know that inflation is all around the world, right? We see it here locally in terms of the things that you are buying. The eggs is like 760 from Giant, and it just doesn't want to come down even when wheat prices are moving down. I think that Japan has a hard time to balance. I guess that sooner or later, it all depends on how much they spend to defend again. All right. I think that something has to give. Okay. I'm personally actually betting that the yen will go up. You look at the recent yen movement, very difficult movement. It's there, that it's so constipated that you just have the feeling that something is going to happen, but it's just not happening. I just don't know what's happening. All right. Yeah. Okay. Wait. How to play the yen to earn? Trade it lor. Trade the yen lor. Trade the FX lah. Emerging market like Malaysia is now having a small bull run from foreign fund. What is your comment? Enjoy the bull run. All right. Get out when things are not good. right? As I mentioned, Hong Kong, China, all at a high already. STI 3004, 3005 is the high, was the high, and we are not near the low, you know. So all these are all there. It's just that when it's at the high, the people will get carried away. So my session here tells you that there is an opportunity, all right, but it's at a high. Pay attention to two things. Number one, the carry trade. Number two, what if the interest rate story doesn't carry through? Okay, whatever it is, if there's a crash, that's your opportunity to enter. Okay, so that's what I'm trying to say. All right. Crisis happened in second half of the year. Don't know leh. But okay, Kuroda is stepping down in April. So that's the key thing to look up for. And the nomination, we don't know the date yet, exact date now, we don't know, right? Might happens in Feb. Huh? Okay, wait. Okay, thanks a lot. I hope that I can help you, because whatever that I'm doing also helping for my own investment. All right. So far I have not been too wrong, so I'm lucky. All right. So I hope that I hope that I'm not correct in this time bond thing, because if it really happens, it's also going to be very bad for my own investment as well. All right. Remember I updated you that last year I bought into the bond, a corporate bond. I start to buy into the bond. It actually went up by quite a lot already. So I think the bond market is recovering. But even if there should be a carry trade, it will also affect the bond. Huh? Thanks a lot. So don't visit relative. Okay. In light of yen crisis, what is your favorite forex trade in 2023? Yen and pound. Short pound, long yen. US harvest. I think US harvest. That's a long story. Can talk. But yeah, tough. Okay. Does it mean I've started cashing out on? I haven't cashed out, but just to let you know, I have cashed out on what I bought in the Hong Kong market already. All right. But to say I totally cashed out of the risk asset, don't have, because some of my instruments very difficult to cash out. Okay, but I make sure I maintain proper margin. All right, and if the crash come, I have money to buy some more. Okay. I won't say I'm looking forward to the crash lah, because I actually don't want it to happen. Okay, because I remember what happened to me when we have the unwinding of carry trade. But if it really happens, then I want to make sure I have money to buy the low lor. Yeah. Okay. All right. So I'll try to answer your question, but I know it's coming to 4. Just quickly, just go through this one So for those who have not joined us, we trade FX, we update many things, we look at stocks, etc. But I don't look at stock specific, okay, in my course. So I'm actually teaching mainly trading into gold, oil, FX. Stocks also, I told you how to enter. All right, so I don't prefer to say that I'm doing at one instrument, but I just hope that you get educated. So quickly, we have all this dashboard to monitor. We don't draw any lines. Everything is all automated because I love automation. So these are auto bots. Just quickly go through. Now the latest one that I'm gonna launch, all right, and I talk about it many times, is this grid. Okay, so I'm just gonna quickly play for you this grid. Okay. Actually, I've been working that for 4 months already. Okay, and every time test it, and then refine it, test it, refine it, and even me and Geraldine was working on the guide and testing it, right? And even after we thought that the version was good, we decided to change it again, and that's where there was a delay. That means that I'm not satisfied, so I want to make sure that it's all done. Now it's able to auto trade, but in the same manner that you can have total control, and you place the limit order, you can let it place automatically for you. All right. I still make it as a trade manager because personally I find that it is more profitable. Okay, and I'm actually encouraging everyone to use it. Okay, so I'm just gonna play it quickly for you to show you. Just give me a minute. Here you go. To show you to encourage you guys to use it when I launch it. I was trying to just do a video and then I don't know why it doesn't show. Let's try again. Can you just click on this to play? No. Click on this to play? It doesn't. Let me just see whether this one can play. Okay, let me just get this and let me just try again one more time to see whether like that can play. I cannot. Okay. Unfortunately, it doesn't play. I also don't know why. Okay. So, what it does is that it's not a martingale. I never do martingale. Okay. The whole idea is when it's at a profit, it will automatically place a limit order to buy at the low of the grid. Let me just share with you what happened. I actually prepared the video and tried that it can play. So it does things like when it hit the interim target profit, okay, and it's gonna have a few actions. One, you can shift it to BE, break even, so that you can control your risk. Second one is that you can reduce your loss. Okay, when it reaches the BE, reduce your loss. Or third, right, you can actually shift it to profit. Okay, so that's the key thing. Now, when it goes into the interim, when it goes up even higher, it works on Fibonacci. When it goes up higher, right, so let's say it goes to the extension of 1.4, all right, then you can say that I want to buy lower by grid. Okay, so it comes down to, let's say, 1.3, or it goes down to 1.2, it will buy limit at each of this grid level, okay? But by using only one thing, which is to use your profit. So it will calculate how much money that you will have allocated to the grid. So this allows a huge potential every time when price goes, let's say goes down, right? You see these retracement. Okay, it goes down, you see this retracement, right? So all these retracement are potential entry point for the grid, all right, and to automatically monitor. So we have traded some, all right, and then if you only place in one $1,000, all right, the EA is able to generate the grid trade using all these spikes to advantage, right? And to get as much as 6K, all right, to 7K. So the reward to risk via the grid is really very high. Okay, so that's the grid trade that I'm working on, and I hope that there won't be any disappointment. I hope that I can launch it next week, or so, right? Because it has been very much delayed. Okay, so thanks for you guys for being very patient with me to do the grid. And I hope that everyone can use it partly for only one thing, okay? A lot of time you realize that if you can make $1, if via the grid, you can use only your profit to generate more than $1 and keep generating to go and write a good trade, right? Then you can increase the profit to $2 or $3. Okay, so that's the whole intention here in terms of adding the trade with the grid. It is not a martingale, because martingale means that when you are on the losing position, you kept adding to your losing position. But it's similar to the martingale because you kept adding position only when it is a winning position. Okay, so it's gonna be launched with no additional cost to you guys. Okay, just gonna quickly just do a bit of a selling because Axie and Blueberry agreed to pay for or to fund the cost. All right, so same thing, you buy the cost $700, you pay back $700. And one thing I would like to get your feedback, right, from the market outlook is because Axie wanted to sponsor more. They wanted me to launch a higher price cost, and they wanted to pay full for that cost so that you can be more profitable. And at the end of the day, they wanted you to trade. All right. So do write an email to me, okay, on things that you want to see. For example, a one-to-one coaching or one-to-many coaching. And then, if you can, I'm going to arrange that to have XC pay for that. Meaning that, again, as a refunded version. Okay. All right. Yes, the video will be shared back in the website, and you'll be shared on a Monday, and will announced in Telegram. Okay, so for those people who hasn't gone for my course, all right, I think that you should, because then you get your money back. Okay, $700 money back. Okay, so use this link to go and take my course. I'm just gonna send this link to you guys, right? And you get the support. So if you had bought in the REITs, I talked about on October, all right, you would have already made back that $700 long ago. Okay, but anyway, the $700, right, will be refunded back to your account. And we're gonna teach you how to do that in just 3 minutes. No gimmick here, really 3 minutes, right? You probably pay a little bit like $40, $50, and you get that $700 back. So the net, right, would be you pay like $50 to go for my course. Okay. Yes, for the course you would be you will get the weekly update and coaching from myself. I do that myself every week. Okay. Module sign up, will you be given access? Yes, you'll be given access to everything. The indicator, the grid EA, all the indicators that you are seeing, everything all given to you in that $700. So after $700, after that 1 year, right, you don't want it anymore. Okay, fine lah. You continue to attend my lesson also can. I don't mind. All right, but if you want to continue to use the indicators, etc., you pay $576 per year. Okay, so that's it. All right, so if you want to get the full fee refund, do I pay the course fee first? Yes, you have to pay the $700 before you get refunded. Is the course suitable for newbie? I want to answer 100% yes. I won't say that it's easy, but with the support, you will definitely make it. Okay, unless you give up on me first, okay. Which broker? We are using XC and Blueberry. Yes, Blueberry is limited. Okay lah, can lah. I will let them know again. All right. Okay, now, for those who are new, if you want to get the free ebook, which contain our module 1, you can just scan this and get the ebook. Just do that. Anyway, it's free also. All right. So my staff prepare it. But will you get the full strategy with the ebook? The answer is no. Okay, you won't get the full strategy. Forget about knowing the full strategy. Probably my support is more important for you. All right. I mean, if you want to get key updates, right, you have to pay for that. And the $700 is refunded. So it's refunded to your account in terms of cash. And can you withdraw that? The answer is yes. All right. So many people asked whether you really get back the course fee through the refund. Yes, I would say yes. Yes, it's true. It's really true. So it's not a gimmick. You really get that money back. All right. If you don't get the money back, so far I have not heard of. All right, then you let me know. But again, only certain countries, for example, Singapore, Malaysia, excluding Australia. Australia don't have. If you're a resident of Australia, don't have. New Zealand also don't have. US also don't have. So only certain countries. Okay. All right. Try to go and get for my course. Because again, that I'm happy that these two brokers are sponsoring. For as long as I launch this promotion. But I mean, seriously, I really do not know how long this will last. This is not a gimmick because every time they just renew either 3 months, 6 months, either 3 months, 6 months, and that's how things goes. Okay. Now, that's enough of the selling. Just want to know whether there's any questions that I can answer. Or any questions that I missed out that I didn't answer you. Because it's a bit late already, you might need to go out for your visiting. Which bond and how to buy bond? Bond, you have to buy it from the banks or you have to buy it from the brokers. So it depends on the bonds that you are buying. I bought it from the bank, so I bought corporate bond. Okay. The bond that I bought last year was a denominated in Aussie because I think that Aussie is going to go up because of the better China relationship. All right. And also I actually bought into Qantas because I think that Trevor is going to come very soon. So very, very lucky. I bought it at about 89, and then yesterday I just checked was about 94. So even if I don't sell at profit, until the end of the bond, I've just collect back the 100. So I'm still happy about it. I think that the key is to keep watching dollar yen and the bond yield. So if dollar yen falls below 1 versus the bond yield, go with the warning bell to ask fair comments. I'm not sure also, Mark. I will look into this. I'm really not sure. Because I think that it's very difficult to predict the warning bell, but definitely I agree is to look into dollar yen. Because dollar yen is the one that tracks that crisis very, very well. Dollar yen and Aussie yen. Yeah. Me totally not looking at the US market. Yes, I am looking at the US market. But I want to look at the US market when I think the low is there. So do look out for maybe the next market outlook. Get Regina to message me also. Regina, as long as Regina tells me, I will usually do that. She's just my very good friend. Although we never met for a long, long time. But as long as she asks me, I will do it. Yeah. It's hard for me to answer bond. Yeah, so I'm not sure though. I would say that last year when it first inverted in terms of the yield, that will be the good time to buy bond. Yeah. So Regina just message. Make sure you ask Regina to ask me, okay? Yeah. Regina, I gave you a lot of things to buy already. So Regina is my long-term student, maybe like 15 years. Okay. Any other questions before I end the session? $700 is sufficient to start Forex? No. Okay. Depending on the trade size, but if you want the serious, right, I think it's about 2,000, even 5,000. Yeah. I think start with 2,000, saying 5,000. Yeah. Okay, please share with your friends if you can. What is my view on European market and euro? I think that if there will be a market that generally is going to be weak, that's Europe. Okay. Euro is a movement against the dollar. So if dollar is weak, euro is going to be strong, all right, because of the dollar index. That's generally how you want to look at it. It's currently the up in euro sustainable? No, the long-term trend of euro is still down, but I guess that short-term is going to go up when the US is weakening, all right? If there is the chance, I would want to continue to short euro. Because traditionally, if the carry trade, right, comes true, that means if carry trade is really happening and everywhere is selling in terms of risk asset, right? Just remember, one country will benefit when the rest of the world is in bad shape, okay? And that's the US. US will benefit, all right? Having said that, US stock will still come down because that's a risk asset, okay? But the dollar will go up. So that's very important, all right? If had open XC trading account without using your link, I know you can't get the refund, okay? You can't. So go to our website, and then we will let you know the solution. You basically have to start a sub account using and then put and in the sub account that you open, you have to make a remark to say join Terra Seeds or join Binni Ong. Then they will open a account for you, okay? And remember, if you contact XC, right, please use this email, Okay, and never go to the general line because our students has a privilege. We don't go to the general line. Okay, so use this email. Yeah, Jason, I don't have time to sell that 424 already. Why you hard sell? How to hard sell? Please join my course. Okay, you want to make money? You join my course because I already made you the money already. Last year I told you to buy REITs, right? Last year October 28, right? I show the proof. You see, if you bought that, you already make tons and tons of money already. See where? See where? This one. You see? You bought in here already, got lots of money already. Why aren't you joining? You buy at 150 now, already 168 already. Yeah, so I sure make you back the money. Okay, when you can start the course now is online course. How much ROI do you expect with your course? I actually have no idea. How much ROI? You see, with my course, you get a lot of privileges. I mean, you get all these updates. If you can catch it, if you can catch the movement. I also very difficult to say. Some people don't make money from my course actually because sometimes that they just don't follow the rules. All right, so I make money from my own strategy. So it's very difficult to say. I also don't know how. I mean, if you follow me like last October, you will make tons of money already. If you followed me and enter into the Hong Kong market last November, you would have made a lot of money already. If you followed me and then enter short into dollar versus CNH, that's a lot of money already. You know, yeah. If you never traded FX, don't worry. Just treat it as an exposure. It's not difficult. It's just like a stocks. Sometimes I think that stocks is even tougher than FX. Okay, Jessica, you're interested for one-to-one coaching, please write to us to say this is something that you're interested. Then, yeah. How much ROI do you expect with your course? My course, right, if you look at it being fully refunded, all right, I think the ROI is maybe unlimited because then you don't really pay a lot of things. You don't really pay money for it. Yeah. Is it difficult to use the system? I actually don't think so. I don't think so because a lot of things are automated already. Example. Can I just show you an example here? Actually, I can show you the grid system, but I'm not sure whether you have time or not. Let me just... Okay, anyway, if you guys need to go, just go off first. I can show you the grid, how it's being traded. Okay, let's show euro dollar. Okay, so let me just set the grid up. Okay. Well, I answer some of your trade answer questions. Let's once I finish showing the grid, we just end the session already So I don't want to take out a lot of the time. Just bear with me for a while this one runs. One-to-one coaching have to pay extra, but I think that my support is really a lot already. It's not difficult to use the system. A lot of things are easy to use. I don't think that you can make money from it. All right, so you take some time to get used to it, but our support is actually very strong. If you have problems installing technical stuff, you can just come to us and we will do it for you. Can trade US equity futures? Yes, you can. What's your view on buying very long dated call option? But if you want long dated call option, that means you're betting that the market will be up. Oh, wait. Just give me a minute. Just give me a while. There's a reason why it doesn't open, because this one here. Okay. Just give me one more time. Let me see. I don't think it's difficult. Can we auto trade start, then we close the position menu? Yes, you can. That means that this is a EA that helps you to manage the trade. That means when there is a trade, it will open for you, but you have to decide what trade to open, okay? And then it will manage the trade for you, okay? Did I answer what's your view on buying very long dated call option? Rather than buying now very long dated call option, why don't you just buy it after the crash, if ever there's a crash? Yeah. But I know what is a typical drawdown from using this EA. This is a trade manager EA. All right, so your drawdown would be determined via the losing trade. Okay, so this means that a trade is open. All right. So the first marker is this particular level here. So let me just draw that for you. This level here is the first marker. All right, and then if there's enough money, the EA will open a greed trade. Okay, so you can see that the profit has been shifted, okay, and then the EA has placed two greed trades here, and then it went to the next level, right? And then it canceled the two limit trade, and then you place in another one more here. So all these are all done when you have enough profit, okay? All right. Once it gets into the interim level where it's shifted to your stop loss, such that it's protect profit, right? It basically doesn't have any loss already. That means when you open the grid, it will open based on your profit, using your profit to trade. All right. So the objective that you need to do, right, is to make sure that your trade gets into a slight profit, so that it can generate enough profit for you to enter the grid. Okay, once you enter the grid, right, basically that trade is risk-free. Okay, so the whole idea is, right, when you go to, let's say, for example, casino, right, you just do not know which one you can do all in, or rather, I won't say all in, but which one you can place a lot of bet. Okay, so same thing as trading, you just do not know which one will move. So the trades that you think will move will not move, and the trades that you think will not move will move, right? Okay, so the whole idea is that if you have only probability of 50%, you just hope that, you know, this one can be that runner, and you just use the grid to keep on adding your trade, okay? And you only add when it's in profit, all right? So everything is all included in that $700, and you get it refunded back. Okay? So, LC said there's a learning curve, but once you understand how the system works, it's simple to use. Yeah, thanks a lot for vouching for that, because that's why I thought so. Okay, so you asked me, I actually thought it's easy to use. All right. Okay, so the grid trades are being filled. You see that? So the grid trades are being filled. And if I were to stop it now, okay, all right, so you have the profit from the main trade, and you have profit from the grid trade. Okay, so this is the extra profit. All right, can? So does the grid add in both directions, or only on one direction? Only on one direction. Okay, meaning that you buy, you will add on the buy side. It doesn't go buy, sell, buy, sell. Remember, you only use your profit to trade. All right, and you just do not know which one is going to be a good trade. Okay, so for example, let's say this was the dollar versus no, this is US 500. Okay, we had a buy signal here. Okay, so there's a buy signal here, right? And you know that there was a buy entry here. So this bar had a buy entry. So what's the problem with this bar here? You were sleeping already. Okay, so you can use the EA to open the trade for you. And the problem is, right, you know that end of the day, this particular trade, right, can travel from here to here so much, right? But sometimes you only make money until here. But when you lose money, you lose so much here. You know, that's the problem, isn't it? So that's the problem here. So what you can do is that you start off the position here. When it goes up, all right, and goes up to each of the key level, this retracement can be a chance for you to add more, and hopefully it can last you all the way here. And any of the retracement you can keep on adding. So that's the key reason of using the grid. Okay, so that's the design of the system. All right, so I just give you one example here. For example, dollar versus CNH. All right, and we had a good, not this one. And we had a good run here, right? What was the good run? This one. This was a huge good run. Okay, then what's the problem here? You start off with one lot here, you end up with one lot here. Okay, but you know that each time when it goes up, there is actually a chance for you to buy and keep stacking your position until your endpoint. Hopefully your endpoint is here. If your endpoint is here, that's fine, you know. So that's the whole idea of this grid. You only add in with profit. Okay. All right. So I'm just going to end the session here because I don't want to hold any of you back. Because I talked for a long time already. If there's any question to reach me, there's my email. All right. But more important, I hope to see you in my class. Okay. How much to pay for the trade management after promotion period? 576 Sing dollar for a year subscription. All right. If you don't want to pay, it's fine. You can continue to attend my lesson. No problem with that. Okay. Yes, Regina, I so love to see you here. Remember, if you want to do a June outlook on the market, get Regina to write to me. Yeah, she has my Telegram. Okay, I see you guys in my class, okay? All right. Thank you and very happy Chinese New Year to you guys. Okay, don't eat too much, huh? Regina, don't eat too much. Okay, thanks a lot, everybody. Bye. My risk and reward ratio for the EA, for usual EA, I would think for my own trade is about 2 to 1 or 2.5 to 1. If you can last for the EA, the grid EA can be as high as 6 to 7 to 1, but only on this type of very nice trending down market. Okay, all right. Thanks, everybody. All right, I see you guys again. So really, bye-bye for now. Oh yeah, if I'm just get it correct, I just want to send this link again for you guys to sign my course. So Jason say have to sell a little bit. So let me just sign. Okay, please go and get my course because you get the full all the $700 back. So it's really no risk. All right, so sign it, get it, and it's not tough. Okay, bye.